Hello and welcome to the TAP Business School. In this video, we'll be giving you a comprehensive overview of VAT in the UK. We'll be covering what VAT is, reviewing the different schemes, explaining how to register, and also discussing your responsibilities. Then we'll finish off by offering some helpful tips. So let's work out the basics. What is VAT? VAT stands for Value Added Tax. It's a sales tax which is charged on the products and services your business sells. There are 3 rates of VAT in the UK: standard, reduced, and zero rated. The most common rate is the standard rate, which is currently set at 20% and applies to most goods and services. The reduced rate is set at 5% and applies to some goods and services such as home energy supplies and mobility aids. The zero rate is applied to essentials such as food and children's clothing. There are also some products which are completely exempt from VAT, such as education, stamps, and some financial services. If your business only sells these types of products or services, then you can't register for VAT. If you want to take a look at the current VAT rates for the goods or services you sell, then please head to the link on screen. When you decide to register for VAT, you'll need to choose the most suitable scheme for your business, as this can have a dramatic impact on your cash flow. There's a standard scheme and a flat rate scheme. The standard scheme is where a business will charge VAT to its customers, offset the VAT charged from suppliers, and pay the difference every 3 months. On the standard VAT scheme, you can account for this using 2 different methods: invoice-based or cash accounting. Invoice-based accounting is where a business calculates the VAT using the dates on invoices, rather than when the invoices are paid. Cash accounting is where you account for VAT when the payments are made. Invoice-based will be more beneficial for your business if your customers pay you straight away, but you pay your suppliers on agreed credit terms. This is because you'll be able to claim VAT on some of the invoices from your suppliers before you've actually paid them, improving your cash flow. However, cash accounting is better for your cash flow if your business invoices customers on agreed credit terms, but you pay your suppliers instantly. This is because the amount of VAT you owe to HMRC is calculated on when you receive the money from your customers, instead of when the invoice is raised. We've covered this in more detail in another video, so be sure to check it out. Right, let's move on to the other type of VAT scheme, the flat rate scheme. This is where you'll charge VAT to your customers and pay HMRC a set percentage of your business's total sales, inclusive of VAT, rather than offsetting the VAT you've paid to suppliers. This makes the scheme more beneficial for businesses such as consultants who don't incur many expenses that are subject to VAT. Some businesses choose this scheme as it's much simpler to manage VAT returns in this way. If you opt for the flat rate VAT scheme for your business, you can still choose between using either invoice-based or cash accounting to calculate your VAT returns. To find out the current flat rate percentage for your industry, please head to the link on screen. It's important to bear in mind that there are certain criteria for joining the flat rate scheme, so it's best to consult your accountant and see if this scheme is right for your business. Now we've covered the different VAT schemes, let's discuss the process of registering for VAT. You can voluntarily register for VAT at any point if you think it might benefit your business, but you'll have to register if your turnover meets the VAT threshold in any given 12-month period. The current VAT threshold can be seen on screen now. Generally, if your customers are registered for VAT, it will be beneficial for you to register too, as your customers will be able to offset the additional VAT you charge them against their VAT bill. You'll also be able to benefit from reclaiming the VAT you incur on expenditure. In most cases, you can register for VAT online using a government gateway account, or alternatively, you can appoint an accountant to deal with HMRC on your behalf. When you've registered for VAT, you'll get a VAT certificate sent to you. This confirms your VAT registration date, your VAT number, and the dates of your VAT returns, so keep it safe. Typically, registration takes 2 to 3 weeks, but it can take up to 6, so plan ahead and stay organized. You won't be able to charge VAT until you receive your VAT number, but you'll still have to pay VAT during this period. The best way of getting around this without a loss to your business is to increase your prices ready to accommodate VAT. Then get your invoices ready to include VAT as soon as your registration number arrives. If your registration is not compulsory because you haven't yet passed the threshold, you can set your registration date for a month after you apply. This will cover you for the period when you're waiting for your VAT number to arrive. When your business becomes VAT registered, you'll have a few more responsibilities, so make sure you note these down. With the introduction of making tax digital for VAT in April 2019, any VAT-registered businesses are now required to keep digital bookkeeping records and submit their VAT returns online using HMRC-recognized software. So if you're currently keeping paper records or using spreadsheets, consider that it may be more beneficial and convenient to move to bookkeeping software. It's also a good idea to make a note of when your first VAT return is due. The first letter you receive from HMRC regarding your VAT will detail this. Your first return date can vary due to a number of factors, so double-check your registration documentation to be sure. It's your responsibility to ensure your VAT return is completed every 3 months. You'll also need to keep records of all your VAT expenditure, including invoices and receipts. You can't technically claim the VAT back if you don't have these, so make sure you have a system to keep these organized. If you use Pandle, our bookkeeping software, then you can take pictures of these receipts and attach them to their relevant transactions, meaning no more shoeboxes full of receipts. If you complete your own bookkeeping, you'll also need to make sure the VAT is separated out in your figures so that it can be accounted for. Finally, you'll need to include your VAT registration number on all the invoices you issue to customers, as without it, they won't be able to reclaim the VAT that you've charged. Now we've covered most of what you need to know about VAT. Keep watching for some helpful VAT tips. You can save yourself some hassle with your accounting by checking that your VAT quarters match up with your financial year end. If they don't, consider changing your VAT quarters, as this will reduce the amount of times you need to produce records for your accountant. Also, make sure that you don't miss out on claiming back all the VAT that you're owed. Did you know that you can claim back VAT on expenses prior to your registration? You can actually reclaim VAT as far back as 4 years on products and assets that you still own at the date of registration. You can also claim back VAT on services such as phone bills and accountancy fees for up to 6 months prior to your registration date. Speak to your accountant for a thorough review of what you could be missing out on if you're not sure what to claim for. Thanks for watching. If you need any more information about VAT, please head to our website at www.theaccountancy.co.uk or give us a call using the number on screen.